Hey guys, happy Sunday. Hope you're all well and have had a relaxing weekend so far. So what I'm going to go over is all the setups that took place last week. I'm just going to talk about obviously the pros, the cons, what mistakes were made, if any were made, and what could have been done better. So let's take a look then from Monday, the 24th of April. So the daily high was this initial swing high going into the Monday trading day, and the daily low was this initial swing low. And again, it's good to note the price had been pretty much accumulatory, from obviously the past 2 weeks, obviously going into the start of this week as well. Now, just going into the 4-hour time frame, so just going to forward play this to just before the European Open. We can see from this that the next draw on buy side liquidity just before the open of the European session was this swing high, and the next draw on sell side liquidity before the open of the European session was this swing low down here. Okay, so I'm just going to label these accordingly. Okay, and just going down to the 1-hour time frame again. So just taking a look. So just forward play this again once. We can see that just before the European Open, the next. So I'm just going to just remove some analysis from the previous week. So because I'm going to redo it all again with you guys. So next draw on sell side liquidity for the 4-hour is pretty much just imbalance, which is the same as where the 1-hour buy side liquidity, sell side liquidity was. So I'm just going to label that accordingly. And the next draw on buy side liquidity is the same as the 4-hour. Actually, no, it's just around this higher. But what I'm going to do just to make sure the lines aren't all over the place, I'm also going to label this as H4 and H1 buy side targets. So now that that's done, if we go to the 15 minutes time frame. So the setup that took place today on Monday was of course based on how price broke outside of the Asian range. So just before the European Open, so just for it to just redraw the lines again, so the 2 a.m. line and the 3 a.m. line, all right? We can see that just before the European Open, there was a bearish break outside of the range, and I mentioned that, well, I'm anticipating price to retest this bearish order block and then proceed to give us a continuation to the downside. So I was anticipating a break retest continuation. Now, just before the London Open, price created these relative equal highs and traded into the H1 sell side target as well as the H4 sell side target as well. Now, I remember at the time I was still BRC, so I was like, either A, we're going to have a BRR, so we have a 5 minutes break of market structure. So it was obviously makes sense to look on the 5 minutes time frame and observe to see how price trades into the bearish order block as well as the equal high. So eventually price did trade into the bearish order block and also took out the equal high as well. So again, I was still anticipating sort of that bearish continuation to the downside. Now, it was obviously worth noting that we saw that prices delivered this initial high, contracted, and had obviously given a higher high. So I personally also interpreted this as a 5 minutes break of market structure. Right. So at this point, the optimal setup to have engaged in was actually to have seeked or looked to have gone long as a 5 minutes break of market structure. Well, don't know what happened there. Just rewind that. Right, so for me at this point, the most optimal setup was to have gone long on the 5 minutes time frame. Obviously, is a break retest reversal scenario, with the first profit target being the high of the Asian range and the second profit target being the H4, H1 buy side target. Now, the type of break of market structure this was a classical break of market structure, right? And price obviously didn't create a breaker. So therefore, the AOI for execution, the AOI for entry was the last down close candle, which is this big ass bearish candle down here. So for me, the setup that presented itself, again, if we set that stop loss 5 pips below the low, right? One could have decided to sell at the high of the candle or anywhere within the midpoint, or you could have gone on to the 1 minute time frame to sort of look for some sort of confluence within this bullish order block. So within this bullish order block, we can see that there's an imbalance there, there's an imbalance there, and obviously on the 1 minute time frame, there's this massive down close candle. So for me, the optimal area to execute would have been where the 1 minute down close candle came in contact with this imbalance. So that was an area of interest. So execution, pending order at the imbalance, stop loss 5 pips below the low. Right, and then the first profit target again was trying to get a 1 to 2 to the high of the Asian range. And the second profit target is the H4 VST, and that was for like a 1 to 3, 1 to 2.9, right? So this was the setup for me on Monday anyways. The one that made sense was a break, retest, reversal. So at the time, what happened was price didn't really, so price obviously traded into H4, H1 buy side, didn't really make much movement, didn't really trade into our AOI, right, before the end of the session. So unfortunately on Monday, there wasn't any trigger. So there wasn't any trigger on the optimal setup, which was the break, retest, continuation long after a 5 minutes break of market structure, okay? Now, another thing to also bear in mind as well with the Monday setup as well was that if you went to the 15 minutes during the London Open, right, you could also see this as a 15 minutes break of market structure, right? So the reason being is because obviously the price delivered this initial low, and then not only did it give a break of market structure on the 5 minutes, but also gave a break of market structure on the 15 minutes time frame as well. So you could have definitely treated this as, sorry, 1 second, I'll just make this a lot simpler. Right, so you could have definitely treated this as a potential long opportunity continuation from the 15 minutes breakup, because obviously price closed above the swing high, creating a breakup, right? So let's assume that you wanted to take this setup from the 15 minutes time horizon, then you could have also gone long at the breakup. So this is something at the time that I know that I didn't consider, as I was a lot more focused on the 15 minutes time frame, but it could have gone at the midpoint of the breaker with a stop again going 5 pips below the low, right? And then you could have your first target at the high. But what I always say with the 15-minute setup is you have your area of interest at the breaker, but the next most prudent thing to do is, rather than taking an entry at the breaker, you go down to the 1 minute time frame and you wait for price to trade into the AOI, which is the 15 minutes breaker, and then you're then looking for a 1 minute setup at the 15 minutes breaker. So if we go down to the 15 minutes time frame, we can see that, okay, so price came down here initially for the retest, contracted, and then delivered the lower low right here. So this didn't really break market structure, delivered a lower low before giving us that sort of acceleration away from this lower low. Now, at this point, of course, it's now, okay, we have a 1 minute break of market structure. You know, we have, if we impose where the BMS took place, right, it's right here, price created a breakout. So AOI was to have entered within this area, right? Now, this would have been a tricky one for me personally as well, because obviously price would have rallied, all right? So for me at this point, it would have been an unmitigated zone. So I'll have been like, okay, it's a likely price might be looking to reverse and trade back into this area to mitigate against the imbalance that was created after price created this initial break of structure, right? So for me personally, even if you'd wanted to go to a 1 minute execution confirmation, this would have been a very tricky setup to have taken also on the 15 minutes time frame. So personally, I think optimally on Monday, there wasn't any trigger for the 5 minutes break, retest, reversal, which was the clearest and also the most optimal setup to have traded for that specific trading day. So that's Monday done. Now going into Tuesday. So Tuesday, again, if we just adjust those levels, we have daily. So again, just going to remove this. So we have the next draw on daily sell side, which is the swing low down here, and the next draw on daily buy side going into Tuesday was the same as our weekly buy side target. And then if we go to the 4-hour time frame, we have again, so if we just forward play this into just before the European Open, the next draw on buy side liquidity on the 1 hour was the swing high up here. And the next draw on liquidity for the sell side is this imbalance down here. Now, if we go down to the 1 hour time frame, we can see that price. So again, just going to bring back those key levels. So this is the 2 a.m., which signifies the European Open, and then the 3 a.m., which signifies the London Open. So just adjust this levels a little bit more accurate. We can see that before the Open, the H1 sell side target was this imbalance, which is the same as the H4 right there. And also we can also see that the next draw on buy side liquidity on the 1 hour time frame was this imbalance up here as well. So that's the H1 buy side target. Right. So going into Tuesday, right, the general idea was, again, there was still ambiguities on the lower time frame, but what we'd seen on this higher time frame was that price had taken out this high of the range, so we were anticipating some form of reversal. So going on to the 15 minutes time frame, we had a range that was pretty much defined before the European Open. So I'll just forward play this. 1 second, just making sure. There we go. So we had a range that was defined before the European Open, where the initial high, initial low, initial high. Price already had taken out the low of the range. So obviously this is a break scenario with our AOI, area of interest, obviously being this bearish order block, right? Right, so just making sure that this is all, 1 second, some visibility would be only on the minutes. So what happened was, just before the London Open, obviously we saw that price had already taken out. Let's just get rid of all of this. All right, so price had already taken out the breaker, right? So obviously at this point, no, price had already taken out the bearish order block and has traded away from it. So at this point, obviously BRC was most anticipated setup in line with the potential bearishness. So going into London now, in this kind of situations, right, you can either anticipate to trade a bullish reversal. So because obviously what comes after a break, retest, continuation is some sort of a reversal, right? That is one of the setups to have looked to trade, or to seek to have traded a continuation. How? Trading a continuation in this would have been tricky, because the only AOI for me would have been for price to have traded back into this bearish order block, and then given a 1 minute break of market structure, and then I would have taken that short, which was in line with the bias. But what I was also looking for, I remember on this day, was a potential reversal setup, where price could potentially be looking to give us a bullish reversal. So again, I was looking for that sort of break of market structure. So none of this is not a break of market structure, right? This price created this equal highs and then proceeded, and obviously we had this equal lows down here as well, and price was just accumulating for a bit, and then it dropped down and took out those equal lows. I was waiting for that to happen. Right. So price then took out the equal lows, but then this move happened sort of because I was basically just waiting for price to take out these lows, and then after taking out these lows, I'll be looking for a setup to go long, right? That was the general idea. But that didn't happen until sort of 7 a.m., which was for me like towards the end of my trading hours. But I decided to just wait around, see if price does sort of provide some sort of a setup. And I did interpret this as an initial potential long opportunity, because price delivered this initial high, created lower low, and broke above that point, given what could have been a break of market structure. And I said, okay, so likely this is a classical break. So I basically went long in this area, stop loss going 5 pips below the low, and I was aiming for my first profit target to be so my first profit target I was aiming for was to trade for price to trade back into the bearish order block, and my second profit target was the H1 buy side target. But essentially, what happened was price took me out. But I didn't even attempt to take another entry because, again, this was already sort of moving towards the end of my trading hours, and again, I wasn't very keen on trading against the predominant bearishness that price was delivering within the day, which was a lot more in line with the H1 as well as the H4 time frame as well. Now, in hindsight, again, one could have said, well, right, there was a time when I would trade a hang off the 800 and take a sell up off this, but for me, this is just not something that I will trade now that is in line with the framework of trading outside of the Asian range during the London Open. So unfortunately for me, Tuesday, there wasn't really any clear setup that was a short in line with the bias. And the only setup that I saw that was a potential reversal resulted in a loss on Tuesday. So that was for me on Tuesday. So Monday, again, there was no clean setup. Tuesday, price was bearish, but didn't really give us much of an opportunity to engage in that bearishness. And if you had gone long, then you would have ended up Tuesday in a bit of a loss. So going into Wednesday, of course, again, we have this initial swing low on Wednesday as the draw on liquidity, and the swing high on Monday on the swing high up here that was created on Friday was the next draw on buy side on the daily time frame. So if we then go into the 4-hour time frame, again, just to forward play this. Right, we can see that the next draw on sell side liquidity is this swing low down here. And the next draw on buy side liquidity is this imbalance. All right. So again, if we then go to the 1-hour time frame, all right, so H1 sell side target is this imbalance right here. Right, so just already have some, so I'm just going to use this instead. And then obviously the buy side targets would be the same as, let's say just get rid of this. Buy side target will be the same, will be this imbalance up here. So just going to take that and put it here. All right, so that's that. Now, if we go down to the 15 minutes time frame, all right, so just before the open of the session, there was this initial range. It was a very small range. One could have also gone for a bigger range, which is this range right here. Right, well, those ranges were both appropriate. But for me, the main thing was that obviously price, after breaking outside of this range, had created this bullish order block right here. So just before the open of the session, right, we can see that price had given us a bullish shift just above the high of the range. So the only setup within this context that would make sense, because price had failed to retest the bullish order block, right, we can anticipate a potential bearish reversal back towards the bullish order block. But in setups like this, 5 minutes entry confirmation is the most ideal. But I personally, these are my least favorite types of setups because they do have a lower probability of working out. But anyway, so generally was waiting for that break of market structure just before the session end. But again, going into the 7 a.m. candle, right, I do remember that when this happened, right, I was like, this is not very clean, because for us to have a clean break of structure, of course, we have this initial low that was created, and we wanted to see price create a secondary leg just below that low. But either way, right, at the time I was looking at this, I was like, okay, there's a likelihood this could be a break of market structure. There's likelihood this could work out. So I'm just going to take this just in case, because at the end of the day, it's just one of those weeks where I'm familiar with weeks like this where the good setups that do work out tend to be the ones that you least expect, right? So I was all right, I'm just going to take it in line with my trading plan and see how it goes, because there was what could have been interpreted as a break of structure, as a momentum on the second leg, and that momentum created an imbalance. So essentially went short within the imbalance, stopped going 5 pips above the high. And my first profit target was, so again, just be aware that price is traded above the H1 BST and could therefore retest at the H1 BST. So, but I couldn't get a 122 to the H1 BST. But what I aimed for was the 800 EMA, because I was like, well, price could potentially retest the 800 EMA, which is also has the short-term low. So that was my first primary profit target for this particular setup, because I could get a 122 to that point. And then the second profit target was the H1 sell side targets down here. Okay, so again, retesting, mitigating against this order block. Anyways, essentially what happened, price came up, took out my stop loss, right? And this setup resulted in a loss. So again, for me, this wasn't really something that I was going to chase and be like, oh, I'm going to take a re-entry. No, it's like it confirmed sort of towards the ending of that trading session. And the probability of it working out was just significantly lower. So I didn't attempt a re-entry on this trade. So already Tuesday, Wednesday, I'd already taken sort of 2 days of losses. Monday, there wasn't really any setup on Monday. So going into Thursday. So now at this point, a lot of amateur traders would be disheartened. It's like, wow, I'll take it to losses, no setup. But this is one of the realities of trading. Not every week will be the same. There's some week where you are going to get amazing setups every single day. There's some weeks where you only have one day of a good setup, and there's some weeks where you have actually no setup at all. And the setups that you do get, they result in losses. But the reality of day trading is being able to withstand all of this through risk management and just be consistent. Okay, just consistently every day doing your analysis, aiming to be as accurate as possible, right? And identifying the most optimal setup within that period of time. So going into Thursday, anyways, the next draw on sell side liquidity was this swing low down here. Next draw on buy side, the same high. Go to the 4-hour time frame. Again, just going to forward play this. So just forward playing this, I can see that the next draw on sell side liquidity is the swing low down here. Whereas the next draw on buy side liquidity is this swing high up here. And then if we go down to the 1-hour time frame, right? So again, just going to forward play this. I can see the next draw on sell side liquidity is this swing low down here. And the next draw on buy side liquidity is obviously going to be the same as our H4 high. And then going on to the 15 minutes time frame, right? Again, just seeing, again, I'm just going to remove these, right? And then just focus on what's there. So going into just before the European Open, so European Open is at 2 and the London Open is at 3. Now, what I can see is obviously price is giving us a bullish break above the high of the Asian range, right? So at this point, I'm like, okay, this is obviously vectoring, but notice this, there's a swing low down here. So even though there isn't a bullish order block, like it's not evidence of a bullish order block, I can see that if I were to go down to a lower time frame, the creation of the swing low would have been a result of bearishness in price action. So therefore, there is a form of an order block before price breaks out of the Asian range in a bullish direction. So therefore, this is a break scenario, not a purge scenario. Anyways, what happened was price basically came down and traded below that swing low. And by doing so, we would classify this as a break of market structure. But again, what I like to wait for is to see how aggressive price moves before the London Open. I can see that there's an aggressive shift below the Asian range, which for me confirms this as a 15 minutes BRR, right? So 15 minutes break of market structure. At this point, we say, okay, considering price is closed below the swing low, right? I will determine that there is a breaker. So we go to the 5 minutes time frame. I can determine that there's a breaker point in this area, and therefore my AOI is now for price for me to look for an entry opportunity within the breaker. So essentially what price did, price had already before London Open contracted into the breaker. So at the breaker, I'm looking for an entry confirmation, but one has to pay very close attention because I'm looking for a break of market structure. Price had created these equal highs before the open of the London session. So therefore, there wasn't really any break of market structure as of yet. So again, I identified those equal highs. And so again, I'm going to wait for price to take out those equal highs, and then I'll look for my entry confirmation. So essentially what happened, price came back up, all right? Again, it's like still there. Which price was just obviously hanging around before eventually coming up and purging the equal highs right here. So after the purge of the equal highs, I'm like, okay, this is fantastic. Now I'm looking for a break of market structure. The price came down, traded below the swing low, giving us the break of market structure. Right, and there's a classical break with a breaker. So AOI to enter this opportunity is going to be at the 1 minute breaker. You go short at the breaker, stop loss going 5 pips above the high. Right, now for me, the two profit targets that I used for this setup were both based on the 800 EMA. So of course, one could have simply decided to have traded to because my entry actually on this was a little bit higher because I did anticipate price to trade into that last up close candle, right? Well, my first profit target, because if you go to the 5 minutes time frame, right, there was the 800 EMA sitting there was the 800 EMA sitting right here. So this should have been your initial profit target opportunity, right? But you could have only gotten a 1 to 2 to that point if you had entered at the upper extreme of the candle. And on the 15 minutes time frame, right, your second profit taking opportunity should have been the 800 EMA down here. So these were the two opportunities that presented themselves, or one could have just simply aimed to have taken both of their profits at the 800 EMA, where you could have gotten that 1 to 2 at around where the H4 sell side target was. So this was a 15 minutes break retest reversal opportunity, price traded into that 800 EMA on the 15 minutes, and thereafter proceeded to give a aggressive bullish reversal. So again, you would have needed to be in and out of London with this trade for you to have been profitable. So that was Thursday. Setup was a 15 minutes break retest reversal. So let's now go into Friday. So Friday, we now have a much tighter range where the swing high became our daily buy side and the swing low was our daily sell side. Weekly is still weekly. And then if we go down to the 4 hour time frame, again, just forward play this. We can see that H4 buy side target is the swing high up here. Actually, no, the H4 buy side target is the same as the daily. And the H4 sell side target is the swing low down here. So that's the H4 range. If we go down to the 1 hour time frame, we can see that. So again, just to forward play this one more time. European Open is at 2. London Open is at 3. So H1 sell side target is the swing low down here. And the 1 hour buy side target is the swing high up here. So these are the ranges defined. So now going on to the 15 minutes time frame, Just delete this because it's unnecessary. Just looking at this now, I can see that, okay, price obviously created this initial range. And after creating that range, what we saw was, again, I'm just going to forward play this to just before the European Open. I was like, okay, for me, this is a purge reversal scenario because price had given us a bearish break outside of the range. So, and that was evident with the fact that this is a bearish candle, but price gave this bullish candle, but didn't close back into the range. So there's a bearish break. So purge reversal was the setup. Now, price did mess around for a bit during the London Open, where price sort of, it didn't give any setup because we're waiting for price to essentially, because price created these equal lows down here. So I was like, the most optimal opportunity would be to enter at the equal lows, enter from below the equal lows, right? So price came up, took out the high of the range, and then proceeded to obviously trade back down. Took out the equal lows, which was an AOI. So at this point, I was now very attuned to looking for some sort of an entry confirmation. So obviously, another AOI to have waited for as well was not just the equal lows, but also for price to have traded into the 800 EMA down here, because that 800 EMAs usually act also as areas of support, as something I've mentioned before, right? But anyways, so let's assume, so there was two ways one could have traded this. I'm going to tell you how I did it initially. So initially, I was like, okay, price took out the equal low, created this low, rallied, but this low did not create RSI divergence. So I didn't interpret this as a break of market structure. I was simply waiting for price to break the low. So price broke below that low. And then again, it gave this initial high and then did this. Again, none of this was a break of market structure. And then price came down, delivered a lower low, traded into the 13 EMA, the 800 EMA, right? And then sort of hung around for a bit before, and this is like going quite late into the session. And again, it's about just tracking price. So you can see price created this initial low, price created this initial high. And what I do in real time is I would usually just draw a line at the lows and at the highs, and I'll track price, right? And what I want to see is, again, price created this intermediate low and gave us an imbalance after trading above that intermediate low, giving a break of market structure that it's very easy to miss if one isn't tracking price. And again, it's you're looking for that 5 pips below the low. That's where your stop loss will be positioned. And then go along at the imbalance, and then stop loss going 5 pips below the low. Now, purge reversal, you're looking to trade back to the recent high. That's your first target. So we're going to be trading back to the high of that range right there. And the secondary target would be to trade back to where? Well, one or two things. There's the H1 buy side target, and there's the H4 buy side target, which is also close to the daily high. And again, it's like, okay, let's say that we want to go for the daily H4 buy side target. The question is there an intermediate high between the H1 and the daily? There is right here, right? So it's an intermediate high right here. So what one could have done as well is, rather than just blindly taking profit at the daily, one could have also aimed to have taken a secondary profit or their final profit at the intermediate high. So it's the two profit target opportunities based on a secondary break of market structure, right, in a purge reversal scenario. So essentially what happened, price came down, right, and triggered a position, and then eventually proceeded to rally, but it was sort of hanging around here for a bit. And then in New York is essentially when the shift happened, and the first profit target was hit, and the second profit target would have been hit, and price did eventually trade into that daily high. But now this was the setup that took place. Now I personally missed the setup because, again, I was very distracted on Friday. I did have quite a lot going on because I was taking a few calls as well. So I did unfortunately miss this initial reversal setup, but it was a secondary break of market structure with price obviously giving this imbalance. Entry would have been at the imbalance. The first profit target would have been as high, and the second would have been either the intermediate high, or if you were ambitious enough, it could have gone for that daily high as well. So it's the second target hit, and that was a Friday setup. So Friday was a purge reversal opportunity. So that's it for me today. I'm wishing you all have a fantastic weekend ahead. I am going to be putting this uploading within literally the next few hours. But I look forward to seeing you all tomorrow morning. All the best.